Topic to discuss today. Quite an interesting one, given that there's a fair bit of noise in the market from time to time on this topic of upfront pricing and pricing in general. There's a little bit of a theme here going on as well, and I think it's just because Ed wants to take the back seat and let Jamie do all the work, but we're going to put the spotlight on Jamie again today. So a really interesting topic, and the reason we've chosen this topic is we've had a good few questions here and there over the last couple of months as to upfront pricing. There's a fair bit of noise in the market, Ed, and sometimes controversial noise, especially around the traditional sort of time cost billing. You know, some commentators say that it's unethical because it incentivizes accountants to take longer to do the work. And then you've got the other side of the fence saying that value pricing and upfront pricing is unethical and immoral because you can charge a client through the nose. So I want to cut through the noise and start with you and get your feedback and your thoughts on pricing in general. Where do you sit and what do you tell firms when you mentor about pricing in their firm?
Thanks, Brenton. Firstly, I'd like to say that point about dishonesty, let's park that for a minute, because you can be dishonest by doing time cost and, putting too much time on the job. That's true. But you can also be dishonest on fixed pricing as well. So let's just start the conversation by saying that we're all honest, and based on the honest people doing the job, where do we sit with the pricing model? So the argument is, should you time cost or should you fix price? That's always been the argument. Mm-hmm. My response has always been that it's not what you do, but how you do it that defines the success. And the what, when I refer to what, that's you do fixed pricing or you do time costs. But how you do it, the how, is how you communicate it to the client. Because if you don't communicate it properly to the client, you'll get in trouble with time costs or you'll get in trouble with fixed price. Mm-hmm. So in the spirit of addressing the problem and not the symptom, because I've always believed that the what is the symptom, the how is the problem. If you address the problem, which is how you do it, which is the way you communicate it with the client, you won't have a problem using either one. And we use both here at the office, and it just depends on client and what they're comfortable with and so forth. But let me just give you a quick example of the problems you can get into if you don't do the how properly, and then I can then hand it over to Jamie, the pricing. Yes. With time costing, of course, the problem is that clients don't like surprises. That's all it is. And it's no different to, if you took your car down to the local mechanic and he didn't tell you how much it was going to cost to fix it, and you came to pick it up, and then he said it's $2,500. And then you complained, and then he tries to justify his fees by saying, well, replace the motor here and this and that and this and that. And it may be perfectly legitimate, but the problem has been he just didn't communicate it with you or to you. Now, that's all it is. So the problem with time cost often is that accountants jump in there and they do the work, they do it legitimately, and then they send the bill to the client. And of course, the client reacts because it was a surprise and they weren't expecting it. So in time costs, you have two types. You've got the amount that is the same each year. So they pretty much know how much it's going to cost. So if it's a little bit over and under, it's not going to make too much difference to them because they already know it. But it's the other ones where, how long is a piece of string? So if you were sent down to do an audit on the company and you don't know what it's going to take 1 hour or 1 day or 3 or 4 or 5 days, and that's where the problem is. And the way I communicate with the client is that I say to them, look, I think it's going to take me 2 days to do this job. And I'll let you know after a day of being in there and doing it exactly how much, not exactly, but around about how much it's going to cost or how much time it's going to take. And, after I get into it, I just constantly communicate with the client as to how much time I've spent and what the expected amount that's left finish the job off. And he or she can tell me at each point of that time whether they want to go ahead or not. And I've never, ever had a problem with that. As long as I position it properly from the start. And the other example is when someone gives you a set of accounts and it's an absolute mess, and you've quoted for the job up front, and you then, when you get into the job, you realize it's such a mess. Then you have to go back to the client and manage their expectations. And it's in that management or the poor management of the client's expectations where the problem is. So you can get in trouble either one if you don't manage the how. The how is where the secret is. So rather than spend all our time with arguing about fixed price or time cost, let's spend our time training our staff and training ourselves on how to deliver it, which is what this webinar is all about.
Absolutely. Third layer to that pricing debate and conversation around value pricing. Did you have any comments on that element?
Value pricing, I know that's been bandied around quite a bit. I think value pricing is a function of the way you run your business. And if you run it like a business where you've got staff and the staff are making money for you, as opposed to being a practice where you're doing all the work. Now, if you're doing all the work, then obviously you've only got 8 hours in a day to do the work. You only earn 8 hours. So the only way you're going to earn more money is to increase your price. And you can't increase your price unless you can justify value. And hence, this is argument about value. But if you dig deeper, you find that the person who's arguing about that is because they're the only person that's just trying to earn more money out of the business. And so they're trying to look for more value-added stuff so you can charge more hourly rates. But if you run it like a business, which is what the Wise Mentoring is about, is if each staff member was to make you, and I'm making this up, $30,000 in profit after you've paid their wages and everything, and if you had 10 staff, then you make $300,000. And if you've got 20 staff, you make $600,000 in profit. Then it's a business as opposed to a practice. And the value pricing still comes into it because you can then separate the higher level of services, like the advisories, at a higher charge out rates compared to, say, the bookkeeping and the BAS is at a lower rate. It's the scalability of that business is where you make more money, and it takes emphasis away from having to increase your prices or argue value pricing. One last thing I wanted to say, Jamie, is that we took that value pricing to its logical conclusion, and every professional out there was to price something based on the value they bring you. It's really a slippery slope, because imagine if you went to your doctor and he said, I price by value. And I don't price by 15-minute lots, I price by value. If you had melanoma and he picked up on it, and imagine if he came back to you and said, well, what value do you put on your price? So I know that's a really silly example, but extrapolate that out to its logical conclusion, and every person did it on value pricing. I'd hate to live in a world where you don't know what you're going to get, because it's basically based on what value you put on it versus everybody else putting on it, and it's not a clear black and white thing. If they run their businesses properly, rather than having it as a practice where they can't scale, and the only way they can make more money is to value price or to justify what they're doing by a higher price. And if you ran your business properly, there's less need for that.
I guess reiterating, there is quite a bit of noise around this topic. So bringing it back to the WISE model and what makes sense to running a business, again, I think as opposed to running a practice and focusing on the balance sheet rather than the P&L, I think it's really important context. So thank you for setting the scene. Now,